This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end-of-day algorithmic trading video update for Thursday, September 24th. So what we want to talk about tonight is the bigger picture algorithmic setup over the last few weeks, and also talk about specifically what happened today. We're going to show you the charts that we used in our trading service to identify this morning's low to within 2 ticks and this afternoon's high to within 3 ticks. Our algorithms projected yesterday and also at the end of last week that we'd have more of a two-way tape. When we got to the middle of this week, the end of this week, we saw that today, and it was a beautiful tape to trade. I mean, if you're a trader, you want volatility. And with our algorithmic metrics, we got long off the morning low, just a couple handles off the low. We got long at 32.0450, and we got short this afternoon at 32.63, and covered that short at 32.34. Let's talk about the bigger picture. And before we do, just some quick housekeeping. If you'd like to get in touch with me, our website is mercurysignals.com. Email markanthony@mercurysignals.com, and Twitter @MC2085. I got a very nice note from one of the folks who's been watching our videos, and he had seen all the different charts, the day trading and the swing trading, and our Saturn GT40 chart. And his question was, how do you present all this without overwhelming your members? The interface itself, it literally took us months to get the interface exactly the way it is. With our service, there's no software to buy, there's no software to download. We run our live chart, which is what you see on the screen. We run our live chart on a Zoom video conference, and the live chart runs from the Globex Open at 6 p.m. Eastern Time in the evening, and then for the next 23 hours to the following day, 5 p.m. futures close. We've got members, of course, in the United States, in the UK, Netherlands, Germany, Australia. This live chart runs every minute that the market's open. So regardless of where you're at, or regardless of what time you like to trade, the live chart's running all the time. Now, what was really tricky is combining all these different algorithmic systems on one live chart. So what you have, and I don't want to spend a whole lot of time on this, we want to dig into what's been happening algorithmically, but I want to answer this gentleman's question. Top row center, this is our day trade algorithm, and you have a combination of our algorithmic time price oscillators and the fixed algorithmic pivots, and we're going to show you in depth what those day trading pivots do, how they're generated, and how you use them. Over here on the left, we have our swing trade algorithm. And the same metaphor here, you've got the algorithmic oscillators weaving through the chart, and you have these fixed points. Now for swing trading, you want to have broader algorithmic metrics. So on this chart, we have our Mercury bands, long cycle algorithmic pivots. Over here, we have our Saturn GT40 algorithm. Now this algorithm was designed for speed. It's part of our Saturn series of products. The day that it was finished, my wife and I had been wanting to watch the Ford versus Ferrari movie. And by the way, that is an awesome movie. I think I've seen it about 12 times over the last couple months. But the Saturday that this algo was completed, my wife and I sat down and watched that movie. And because this algorithm was created for speed, to literally front run the institutional algos, that night we were watching the movie and I thought, there it is. Saturn GT40. It's part of the Saturn series. It's built for performance. We're going to call it GT40 in honor of the Ford race car that won at Le Mans in '66. And I believe also '67, '68, and '69. Pretty darn cool vehicle. Now, I'm going to show you the end of day chart for a Saturn GT algo, but this is what's called a predictive algorithm, because when we go full screen on this, we look at the slopes of the algorithms themselves and the spots where they cross over, and it literally gives you very high probability spots where you're going to get the daily high, and that is exactly what gave us the high today and got us short at 32.63, which we covered at 32.34. Down here we have our NASDAQ chart. Over here we have another look at our algorithmic oscillators. Here we have our long cycle, what we call matrix pivot. Now, if you're a day trader, the purple hash right here, we call this the matrix pivot because this literally is the epicenter for day trading. And with this matrix pivot, generally speaking, when price is above the matrix pivot, which again is this purple hash, when price is above the matrix pivot, generally speaking, you want to be either long or flat. And when price is below the matrix pivot, generally speaking, you want to be either short or flat. And look, you don't have to trade. No matter what type of system or algorithms you're using, you don't have to trade. And I guarantee you, the less frequently you trade, the better your results. We took 3 trades today. We got long at 32.04. We took profit on it. We had a short entry that I think we pulled on a 3 lot. We pulled out about 20 handles out of it. And then we had the end of day short at 32.63. So 3 trades. That's all we took for the whole day. And actually, I'd prefer to take even less than 3 trades. So, there's an old adage in trading that you don't make money trading, you make money waiting. And so much of trading, whether you're day trading or swing trading or longer term positional trading, it comes down to what I call the 2 P's, patience and planning. Know where the levels are, where you would like to consider taking action, and you wait. And if you don't get your levels, and if you don't get your setup, you don't get FOMO, you just, the market's going to be here tomorrow and next week and next month. One of the worst things you can do as a trader is get FOMO. Have an idea where you want to take action. You wait for the right setup, and then you take that setup and you have a reasonably tight stop, and you take incremental profits, get risk out of the trade as quickly as you can, and then you let the runner run and see what you can get out of it. But it's all about patience and planning and risk management, i.e. taking incremental profits. And we'll do another video on that, but we like to get risk out of the trade as quickly as possible and then just manage the runner. So down here we have our long cycle matrix pivot. And this uses the same math, but this chart is well over 2 hours per bar. So it gives you a longer term perspective of where you want to be long or flat, i.e. above the long cycle matrix pivot, you want to be either long or flat. And below it, you want to be either short or flat. In the center here, we have 2 of our proprietary tick charts. Now, these are important not just for day traders. Even if you're a swing trader, you still want to get the best entry possible. And the way this algorithm works is real simple. We've got a number of different things going on in this chart, but the most important thing is when the white hash is above the red, and there's a white hash and a red hash on each bar. When white is above the red, then at that particular point in time, the buyers are in charge. When the white hash is below the red, at that particular point in time, the sellers are in charge. So let's take a look at the charts. I wanted to start looking at the bigger picture. This is about as ugly a chart as you'll ever find. One of the things we're most proud of is our Mercury time price analytics algorithmic regression lines. Now, first, let me share with you what an algo regression line is. If this is the first time you're watching one of our videos or the first time you've heard this term. Just about every standard chart package has something called regression lines, and I have no idea what they're supposed to do or what the metric is behind it. So we're not talking about the canned regression lines that you get in your brokerage trading platform. The way we do regression lines here is a function of the dual nature of time, and that is time is both circular and linear. Now the circular part is simple. I mean, you look at a clock, it's round. There's the same number of hours, minutes, and seconds in every day. But equally important is the fact that time is also linear. And what I mean by that is you can't stop time and you can't rewind time. So what these regression lines do is they form a relationship with price. In price, just take this very steep line right here. Price will connect and reconnect and break away and then reconnect from these regression lines over and over and over again until the point where price can no longer maintain that connection, and that regression line goes up and off the chart into the sunset. But what's interesting about the regression lines is price will fight to stay connected, and then periodically you'll get these violent breaks. Now, one of the things that institutional algorithms love to do is they love to run stops. If you're short, they want to run your stops above where price is trading. If you're long, they want to run your stops below. And what happens is the institutional algorithms, they're like little Pac-Men or Ms. Pac-Men. They are designed to gobble up stops because they use those stops as fuel. And when it doesn't find any more stops to consume, well, then they reverse. And so what happens, as an example, is price will try and maintain the connection, and then you'll get these spikes up, and it's what I call an algo hook, and then it'll reverse hard and come back down through. And you see that most notably right here. But you see that with all of these regression lines. Here you get a move up, you get the algo hook, and it comes back down, and you see it again here. You see it here, but overall, what you've got going on with this chart is you've got 1, 2, 3, 4 algo regression lines. Well, notice that it's lost all of them. And most notably, when it crashed through this regression line. And you can see what happens here. It comes down, you get a sharp move back up. Because what happens with these regression lines, they have this characteristic with price where it's kind of like a bungee jump or a bungee cord, where price will crash through one end of them and then slingshot back above. Now, the problem with this regression line is it broke and then it never could get back up. And it came up here and it tried to re-engage with that regression line and it broke hard again. And then it came up a third time and it broke hard again. And now here on this bounce up to, what was that, 33, call it 33.65 or 70, it can't get anywhere near that regression line, and now you have a problem. Now, the regression lines themselves are using third and fourth derivative algorithms, but there's an additional derivative of these regression lines, and it's what we call a regression line cross vector, and that is the precise spot where two regression lines come together. You can see it here and here and here, and what you do is you take that spot where the regression lines intersect, and you draw a horizontal, what we call vector, at that price. And those vectors become very, very, very powerful support and resistance. And here's what it looks like. Here you have the vector at the intersection of the white and the cyan, or blue if you wish, regression line. That was at 34.31. Now you saw what happened when that broke. And then it slingshotted back and it broke hard again. Then we have the second cross vector at 33.83. Powerful move below, back above, it holds, and then it crashes through. So you get this wild behavior. They're very, very binary on both sides of the cross vectors. Now, this chart was posted on Twitter September 13th. And the point when I posted that chart was if you lose this cross vector down here at 32.88, you're going to have big problems. Because just below that at 32.65, it's not on this particular chart, but on one of the other regression line charts, we had a level here, I believe it was 32.65, and it said game over below this level. Because if you lose this cross vector at 32.88, you're going to lose 32.65 very quickly, and then it gets ugly. And we saw two fast moves down to 3,200 just this week. So this was the level that broke, and that gave you the ugly move down to just above 3,200 on Monday. You had the subsequent bounce, and we're going to take a look at those charts in just a minute. Now, keep in mind this cross vector right here at 32.88, and keep in mind that back on September 13th, I posted In this chart, by the way, this was the end of day chart on Friday, September 11th. So I posted on Sunday, the 13th, to be very wary of this 3288 if it breaks. So let's look at yesterday's action. And this is our proprietary tick chart. So here you have that level we were just talking about at 3288. So at about 11:30, and it's not a coincidence that it first broke this yesterday, yesterday was what, the 23rd. When it first broke, this was right after the European close at 11:30 Eastern Time, US. And then you get this feeble bounce attempt, doesn't even make it right back up to the 3288. And that was a little after 1 o'clock. And then you went bidless. Right after you had this failure at the cross vector at 3288, the tape went literally bidless for 2 hours. This is 301 right here. No bid for 2 hours after you lost that line. And that is exactly what I was implying with this chart from end of day on Friday the 11th. Now, we're going to talk about what happened today, but I want to walk you through what happened yesterday to set up the action that we saw today. Now, switching back over here, on our swing trade chart, we've got the Mercury bands, which are very long cycle algo pivots. You see a lot of spacing between the Mercury bands. But if you're a day trader, here on the day trade chart, we have what we call our Mercury descriptive algo pivots. And we call them descriptive pivots because when we run this algo in the morning, which is run a couple hours before the market opens, we produce this data sheet. Now, this is yesterday's. So yesterday, you had the daily bull bear pivot. And again, this is all done an hour and a half to 2 hours before the market opens. And by the way, I mention in just about all of these videos that these are the exact same metrics that the institutional algorithms use. And I know that's a very bold statement. And the first time folks heard that, you're like, this guy's nuts. Well, you look at our charts, and it does this every day. And so if we're not using the exact same metrics as the institutional algorithms, then how do our charts do this every day? How do we run the Mercury bands the night before? Or how do we run these pivots in the morning, the shorter cycle stuff, before the market opens, and have this degree of accuracy? It's because it's the same thing. I mean, look, our goal and the purpose of our company is real simple. We want to level the playing field and give you, the individual trader, the same tools as the institutions have that are moving the market. You can't compete with them if you don't know what they're doing and where they're doing it. And what our systems do is they give you a window into what the institutional algorithms are doing and exactly where they're going to do it. So here you have yesterday, Wednesday the 23rd, the algorithms that were run. This data set was run almost 2 hours before the market opens. Now, I want to point out a couple levels. When you get multiple of these pivots at the same price, they become very important. So here you have our trend confirmation pivot at 32.94.94, and you have our multi-day trend pivot within one tick at 32.95.02. And then keep in mind, your daily bull bear pivot is at 3,300 plus a couple of ticks. So this is yesterday, Wednesday the 23rd. Now let's take a look at the chart to see what happened. Now, first thing you notice in the morning, you come up here and you fail a back test at the back test pivot. Now, when we say back test pivot, we're not talking about for the whole move up to 35.88. This is the back test pivot on a daily basis. So here you have this move up into it that fails after the day session starts. These algorithms are run 2 hours before the market open. Now, this is a good time to point out the fact that we don't ever manually put lines on a chart. Every line that's on our charts, every one of these horizontal lines, is a computer algorithm, a time price algorithm. So none of these were manually placed on the chart. But the fact of the matter is, you and I, if we sat down with the charts and a ruler and a pencil, we couldn't draw these any more accurately. But every single one of these is an algorithm. So again, the fact that all these lines are created from an algorithm, we simply take the algorithmic data from the morning and so that our members don't have to throw a bunch of different lines on the chart. After we run the algorithm, we select the most important ones and we overlay it on the price chart. And that's what you see right here with these horizontal lines. Now, what's cool about this algorithm, to give you an idea how sophisticated this is, it's one thing to be able to produce algorithmic pivots before the market opens that match what the institutions are going to do that day. It is an entirely different level of sophistication entirely to have an algorithm that not only gives you the level, but ascribes the type of characteristic behavior to expect at that level. Now, I want you to think about that. For example, this level here at 3309.99, not only did our algorithm say that that was going to be an important pivot price, but it told us what type of pivot it was going to be. Think about that. Now, not only are these the algorithms that the institutions are running, but I could make the case that the stuff that we offer our members is more sophisticated than the stuff the institutions have. I mean, back in January, we put out a challenge. We'll take on any trading system. This is directed at institutions, not commercial trading systems. But we put out an open challenge back in January that we'll put our algorithms head to head with any institutional trading system anywhere in the world. Now, we've had offers to buy this stuff, but it's funny. We get offers to sell these things, but nobody wants to challenge us or go head to head. Well, they're not getting them. This is so that individual traders like you and I can have the same tools as the institutions. But let's get back to what we're talking about here. Backtest pivot 3309.99, trend confirmation pivot 3294.94, and then you have another key pivot within one tick. So let's take a look at the chart. So you get backtest failure at the backtest pivot as identified by our algorithm. Now, the beauty of having the moving oscillators through the chart is that the automated algorithm went short right at that price. Our daily bull bear pivot, if all our systems did was identify the daily bull bear pivot every morning, it would be worth much, much more than what we charge for membership. And by the way, real quick segue, if you haven't been to our website, it's mercurysignals.com. You can click on the menu items and find out a ton of information about our ES and NQ system. You can check out our chart of the day library. You can see the reports that I've written. Now, I want to just very briefly mention this. One of my pet peeves is companies that try to sell you a trading system, and they'll put just enough information on their website to try and get you to make an impulse decision. Now, let me show you what we put out. And this is just one section of our website. This is the About section. There is no, and I'm willing to safely make a claim that there is no company that offers trading system analytics that puts as much information up front on their website as we do. And if they don't do it, the question is, why doesn't our competition do this? You go to our chart of the day section. Day after day, there's the 24th, 23rd, the 22nd, 21st, day after day, and you can see we've only scrolled down a little bit. And we do this day after day after day. Now, if we're not running the same systems as the institutions, how can our stuff do this every single day? And again, why don't other people that offer trading systems and analytics for traders put this much information on their website? And again, this is just one section. Check out our reports section. You can go back down here to the reports that I wrote in January. All about the math. We talked about how messed up the math was in the algorithms, which indicated that something bad was coming, middle of January. Go back on the chart and look what happened the week after that. February, dangerous cycles. We were coming into some really bad cycle behavior that we predicted in February. February 9th, calm before the storm. There is nothing that has happened of significance in this market this year that we didn't predict based on, long before it happened, based on our algorithms. And so you can see all that. Now, we didn't write a report last week. We've got a very ill family member. But if you go back to this report, it was written a couple weeks ago. One thing leads to another. Everything that began happening after this report was issued, everything was predicted in that report. And of course, if you want to find out what our subscriptions run, you can go to that tab right there. By the way, last thing on our website, I'll just swing back over here. If you are interested in a trial subscription, you get a 21-day trial. Use the promo code WEB30. You'll get $30 off the 21-day trial. And to just give you an idea of the way we choose to run our business, we give everyone a lifetime rate lock. Your rates will never go up, yet there are no contracts. You're not committed to stay any longer than you want. So you get a lifetime rate lock, no contracts. And when you take some time, you can literally spend a day on our website looking at all the charts that we offer or that we post right up front. But when you look at the information that we provide, if you're a swing trader, I'm going to show you this chart in a minute. Swing trading, day trading, long-term positional trading, frequent intraday trading, we provide all of it for you on one chart every single trading day. So let's go back to what we were talking about. This is what happened yesterday. You have a failure at the backtest pivot. And then you come down and you break the daily bull bear pivot. Then you break the X5 institutional pivot. Now this X5 pivot, the time cycle that this runs on is over 7 hours per bar. You see, the institutions, they're not trading off of 5-minute and 10-minute bars. So every morning, a little bit into the day session open, we provide you with our X5 pivot, and that is a key level. And what you look for at the X5 pivot is whether the institutions are providing support or they're letting it trade through. Now, the name X5 comes from the fact that these pivots stay on the chart for 5 days. And then each morning there's a new one and the oldest one drops off. But you come down through the X5 pivot for yesterday at 32.96.47. Now, these are the two levels that I showed you on the chart on our Mercury descriptive pivots data sheet. Trend confirmation pivot just a little bit below 32.95, and within one tick, the multi-day trend short cycle algo. So you can see them both here at the same price. You blow through that, you come back, that's where the back test fails, and then you just keep breaking these pivots one at a time. The X5 pivot for Monday at 32.89.92. The tick trend pivot for yesterday, which was 32.83.34. The X5 pivot for Tuesday. And every line on this chart was issued to our members before the day session opened. Now, I want you to think for a minute. Regardless of what type of trading you like, whether it be day trading, swing trading, high frequency intraday trading, longer term positional trading, how much would it help you to know where the institutions are likely to support price or not support price in this case, and know this information ahead of time? But you broke through all these pivots and then you got the fast waterfall decline. A couple more charts we want to show you. These are the long cycle Mercury bands. And on our live chart, the Mercury bands, because they're longer term algo pivots, you see those on the top left chart for our swing traders. And this is what the Mercury bands look like. And these are published before the Globex session opens. And you can see the precise movement from band to band to band all over the chart. Now, what's cool about these Mercury bands is for S&P 500, for the E-mini, the Mercury bands are updated prior to the Globex open each evening. Now, for NQ, now talk about sophistication. For the NQ Mercury bands, they are produced once on Sunday, and that's it for the week. So we'll pull this chart back just a smidge. And so me see if I can go back here just a little bit more. So again, these were produced on Sunday before the Globex open. And you can see how precisely it trades off these. When you break the Mercury band here, it comes down, finds support down at this Mercury band, comes back up to this Mercury band, comes back down literally to the tick to this Mercury band. Those were published on Sunday. Now let's talk about what happened today. If you're a longer term trader, now I mentioned at the beginning of the video that our algorithms identified the morning low to within 2 ticks. And here you have it down. This is a very, very long cycle. Notice you only get a couple of bars per day. This screenshot was taken at 1:14, but this is what got us long this morning at 32.0450. Price came down here, and it actually did it twice. When you look at the smaller time frames, right off the open, it came down just a handle or two below the roundy at 3,200, bounced back up, came down a second time. That second time when it held, as soon as it popped back above the roundy at 3,200, we got long at 32.0450. Now, where do we get these levels from? Well, we not only have the main live chart, but during the day, we frequently switch over to this chart, which gives you 8 longer cycle algorithms. Now, this is the shortest, and this in and of itself is a time frame that's probably longer than what most traders look at. And they get progressively longer as you go over here. And then the lower row, they get longer still and get even longer as you go to the right. So this is the algorithm that we're looking at with the chart that we just showed you. This is full screen. And this is what we showed our members this morning. And this is why we recommend our members to get long at 32.0450. Now, we recommend trading in thirds. So providing your account's large enough, you want to trade a number of E-minis or micros that allow you to take the trade off in thirds. So the first piece of the trade we took off for a +10. The second piece of the trade we took off for a +20. And then we took another piece off when it was up at 32.45. Add it all up, it was just a beautiful, beautiful trade. But when you know that these institutional algorithmic levels are here, when you see that they hold, you can take action. Now we knew that even if that didn't hold at 32.98, the longest cycle that there is, you had support right below that at 31.93, so you weren't risking that much. But that was all right there. That's why we took that position. Now, why did we take the short trade this afternoon? And by the way, one more look I want to give you at this chart. If you're a longer term trader, this chart goes back to this in this view. I mean, I could show you an even wider version of this, but just on this screenshot, this goes back to August 2nd. And you see all the spots, the pulls back, the pullbacks to support at the green arrows. Now, after you had your high, support, resistance, see it's coming right at the algorithmic time price oscillators, just like you had support here and here. You come down into support. You fail at algorithmic resistance. You have support at algorithmic support. You fail at algorithmic resistance. I mean, is that precise enough? Support. Failure at resistance. Support. Failure at resistance. Support. Failure at resistance, and down into support again. Now, is that not the coolest thing that you've ever seen? So when you have access to the same metrics, and again, no one has ever challenged us on this claim. We've been putting out these videos and tweets since December of last year. No one has ever challenged us on the claim that these are the same metrics that the institutions use. And no one's going to challenge you. You can't look at these charts doing this every single day and conclude anything other than that. So I want to show you one more chart. And this is the chart that gave us the high today. Now, this is our Saturn GT40 predictive algorithm. Now, what's cool about this is you look at the peaks and the troughs in the slope of the purple and the two white lines and the orange line. And those peaks and troughs, they tell you where resistance is going to be before it gets there. So this is today. This is yesterday. This is the spot that we identified for our members long before it came up here today. And we said, this is the spot where this is going to run into a problem. And this exact spot is 3267.40. So we identified this ahead of time. Again, this may be the only algorithm of its kind that gives you a predictive level before price gets to it. So we let our members know that this is the spot this was going to run into a problem today. If it traded up into 3267.40, your high was 3268.25. It was within 3 ticks. And so when it came up here and held as resistance, we got short at 3263, and we took profits. Again, we took incremental profits, and we took the position off when it started to bounce. We got out of the trade at 32.34. And this, folks, is why the institutions make money just about every day, if not every day. Now, we're not promising you're going to make money every day. We're not promising anything. Past performance is not indicative of future results. Futures trading involves significant risk involving leverage, which means you can lose more than your initial investment. Our goal is to provide you with the same algorithmic tools as the institutions so that you can, A, improve your probabilities of success, and more importantly, improve your risk management. And so again, we urge you to take a look at our website, mercurysignals.com. Again, if you want to get a hold of me, mercurysignals.com, email markanthony@mercurysignals.com. We post a lot of these charts on Twitter every single day. You can find me on Twitter at MC2085. I want to wrap this video up, first of all, thanking you for your time. And most important part of our message, we try and end every video this way. You know, things are difficult, not just in the United States, but all around the world. And I don't know how anybody can try and make it through the things that are going on, especially if you have kids, without having a relationship with God. God will never leave you. He will never forsake you. And this is not the time to go into it, but there is math in this system. Every bit of the math in this system comes from the Old Testament, comes from cosmology, the planets. It comes from many, many different things. And the one common denominator is every bit of math in this system comes from the immutable math of God. God is the great mathematician. He's the inventor of math. He's the inventor of physics. But that's, I digress from what I wanted to mention. God will never leave you. He will never forsake you. So if you've never had a relationship with God, or you're like me, I'm pushing 60 years old, and for many, many years, I ran away from God because I just felt like I didn't deserve him, which is silliness. And when I almost died in February 2019, I literally got to the point one night where I said, Lord, I don't know if you're ready to take me home or not, but if you are, I'm ready. But if not, I'm going to change the way I live my life. Doctors didn't know what was wrong with me. I was extremely sick for about a month. Next day it was gone. Shortly thereafter, development of this system started, and this is the result. And I don't want to conflate the message from earlier in this video with the message of right now. Forget about all the algorithmic stuff. If you don't have a relationship with God, or if you did and maybe you kind of run the other way, I cannot think of a better time to invite the Lord into your heart or invite him back into your heart, you'll be thankful, and your kids will be thankful, and your spouse will be thankful. And I'm thankful that you watched this video. God bless you. God bless your family. And we hope to see you again real soon.